Alright guys, today we're going to take a look at a different way of using support and resistance levels. Now, I know the traditional way of drawing support and resistance has to do with something that's called structure. And this is kind of like a term, I never really heard this term, I guess when I started. I guess it was just called support and resistance levels or support and resistance zones. And one of the things that people would talk about back then was just drawing a zone of support and resistance so that we can find places so we can buy or sell, if that makes sense, right? So we have resistance, and then the market pulls back. We would wait for a pullback and see if it was an opportunity to get back into the market if the market was trending to the upside, and then the opposite for the downside, meaning if the market broke to the downside, it would pull back and find previous support as resistance and continue to head to the downside, right? So many years ago, I started playing around with the support and resistance zone. So initially, I would use a horizontal line like this, for example, and then let's say it was a thick one, thick bar like this, so that I could identify future support and resistance levels to buy. In this case, if there was a breakout, I could buy up here once the market breaks out, but other traders like to wait for a pullback to see if they can buy here and then get in position to go higher. And I was doing this for quite a while. I probably did it for maybe a year or so, and you can see how this works out, right? You see that resistance there and a breakout. So this is all hindsight, but in the grand scheme of things, I was very confused on where to draw support and resistance levels, right? So one thing I've noticed now is people talk about structure, which if there's previous resistance, you want to draw kind of like a zone like this, for example, right? And something like this would be an obvious support zone. Okay, and something like this would be another support zone, and you're trying to figure out what are the important support and resistance zones. So if I go through this chart alone, right, this is the USD, the Euro USD on the daily chart. You can see I have so many different levels that could be a support and resistance zone. So me personally, I would feel lost on what levels I should deem a true support or resistance, or else I'd be confused on where I want to buy or sell, because the market's always going to make big swings up, big swings down. It's always going to fluctuate, and from there you can draw these levels. But this left me confused, and I'm pretty sure there's some people out there who trade the financial markets and they feel confused on what levels they should use or what levels they should not use or disregard, excuse me, or disregard before getting into the trade. So I kind of moved away from that. I started studying to look for support and resistance zones that I can simplify and have a more simplified approach to trading financial markets. And with that said, I started using pivot points to kind of draw them out for me. And it's like an old school thing where this is back with floor traders used to calculate the previous the high, the low, the open, and the close, so they have a predetermined levels for the next day. But that was way before we had the internet and trading software like we do now with TradingView and other platforms. But if I plot these on right now, you see what I'm talking about. So I'm going to put this on here, and you'll see I have it set up a certain way. Yeah, let's see, I have this set up a certain way. So if you draw it out on your chart, you might have to customize it to like different colors or different bar settings and the thickness of the bars, and however you want to customize it. But just a quick video just to give you an idea of the power of using pivot points and how to simplify your trading. So this is a daily chart, and these are pivot points based on a yearly calculation. So, and this is a trade that I took way back. This is probably around 2020, but it was a great trade and it was a great opportunity to find the areas that I needed to look for if I wanted to buy or go long, or if I should go long or go short. So instead of drawing these lines out for myself, I have predetermined levels that I can just wait and see how the market reacts and then make a trading decision. It's not always going to be perfect, but this will simplify your trading a great deal, instead of having to draw them out and figure out where the market's going to find resistance, where it's going to find support. So let's move forward here. So this is the start of the new year, and you can see how the euro starts trending to the downside. Now, again, if I'm looking for support here and I'm drawing this, how do I know how deep this market's going to go? How do I know if the market's not going to stop right at the top here, or it's going to move down a little lower and then, continue to move up, or whatever it's going to do? I would be confused about that. This could be deemed as a high, this could be deemed as a high, and this could be deemed as a high. There was no way for me to know how exactly the market was going to react or how deep it was going to go. So in this case, you can see it did bounce here, but who's to say it would have not gone lower and then bounced down here? There's just no way of knowing that. So the best way to look at the market and approach it is just let the market work. You stay disciplined. You stay flat, and then we start looking for opportunities. So now we see, okay, there's support. This is the main pivot level, which I have it here in blue. This is the main pivot level. If I were to draw support, the way people go about it, and they draw what's it called, structure, I would have been waiting to try to buy down here. The market never made it there. So now what? Does that mean that I'm waiting for this resistance zone, to come back up and try to short it? Or am I looking for this zone here, of this previous support? There's no way of knowing if this market's going to go up here and then continue down, or if it's going to head up to this next level, which I could draw out. Right? So there's just no way of really knowing which levels are valid and which levels are not. And again, this goes back to having the pivot points work in your favor. All you have to do is focus on these levels here, okay? And you can even draw an area, which I do myself, right? Because nothing stops on a dime, and if it does, it's not, it's not a constant thing, right? The market's always overshooting levels, so you do want to look at levels as zones instead of like an exact number or an exact price. So in this case, if I was to look for buys or sells, this case of buy, you can see how this would look as a main pivot point, would be a support, and the market would do its thing. Now, where would I take profit? And I actually took this trade back then in 2020. The next level I was looking for, traditionally, if you go online and you learn about pivot points, you say, okay, so from the pivot, the next price to look for if it's going to trend to the upside would be resistance 1, and that's what I have this line up here, which is resistance 1. And the opposite is true if we're looking for a break to the downside. We would say, okay, so the market broke the pivot to the downside. Our next target would be support 1 or S1, right? So for a while, I try to figure out, well, the market wasn't going exactly to these levels, and it also depends on how wide these levels are. In this case, this is, you're talking about 1,000 pip, swing. So the market's not exactly, it's going to be tough to kind of tell if this market's going to go up here or what the deal is. So I came across some information that between pivot levels, there are also called median levels. Now, I won't go through the whole process here to confuse you because I don't want to make this video too long. But in between these levels, there are something called median levels. And you can put, I'm just guessing or estimating that it's going to be right around here. You can also use a Fibonacci tool to calculate 50% in between these two moves, which I use because it's not automated into the platform. You have to do it manually. But you could see this zone over here applied as support, and you say, okay, my next level of resistance, possibly I'm going to wait and I'll adjust my stops and let the market go up to this median level. So if we let it go and we adjust our stops to let the market keep on going to the upside, you can see that it gets around this level right over here. Okay, and that's when we can start to look profits. It's not a specific price, but you can use this as an area. Okay, so that was one trade that I took previously that worked out extremely well. And so we found this area of resistance here. Now, if the market starts going down, or if you want to start getting short, now there's different reasons. You can't just use, everything works in tandem, right? You can't just use the pivot point by itself. Everything works all together in trading, whatever strategy or tools that you're using, you have to use things in combination to get the best outcome, in my opinion. That's been my opinion. And to go back to the reason why I bought here, it wasn't only because it was a pivot point. There was a confluence there that I felt strongly about the trade. And if you go back to my other video that you can watch after this, which is about trend lines, again, I'll show you the reason. Well, there was two reasons, but this is the way I draw my trend lines here to give me an idea of where I want to buy or sell. Okay, I connect my tops and my bottoms, and you can see that's the reason why. That was reason number one. I wanted to buy here. And reason number two was because of something called hidden divergence. So I call it trend continuation divergence. Okay, where the MACD is creating a lower low and price is creating a potential higher low, right? Because we never know if the market's going to stop there or what. We can only manage risk, and you see how it plays out and set our stop losses. But you can see the combination here, right? The combination between the trend line telling me there was a possibility of support here, and the MACD showing hidden divergence here along with the pivot. So this level right here was really a hot zone to try to go long, and it worked out extremely well. This was a nice couple of hundred pips profit. And if you wanted to go short, when the market went up to this zone I was talking about, median zone, there was multiple reasons for that as well. Okay, if we look here, we can see it depends. Everybody has their own perception or viewpoint on the market. In this case, I saw a wedge, so I'll draw that for you now. Let me just get my freehand. This here and this here. Okay, so I saw that as a wedge. I saw this area as a resistance zone because it's a median zone. And there's also a slight divergence. It didn't really stick out at you, but I've been trading divergence for a very long time. So I'm kind of used to looking at divergences on the MACD. But this was a great trade, a great combination of confluence, median level, divergence, bearish divergence, and a rising wedge, which is also known as a bearish wedge. And price, did its thing. You set your stops up here to protect yourself, and then you target the next level, which would be down here again at the pivot. This zone right over here. Okay. Now the market's gonna mess around. It's gonna go sideways. It's gonna see. What's funny about this is that the market's never going to go in one straight direction. It happens, but it's rare. It's never ever going to go like straight down or straight up. Sometimes it happens, and it's a great, trade that, that the profits come in quickly. But on the other hand, you have to expect fluctuations for the market to, fake you out or scare you out or hit your stops. If you keep adjusting it too tight, the market will pull back, stop you out, and then continue in that direction. But in this case, you can see it took its time. It even rallied up just a little bit right before that, and finally it came down to hit that pivot level and create a very nice trade. And eventually it started going further down. Now if it continues down, we also have, if I remove this and I remove this, remember there's also median levels in between these zones. So you have this main pivot and you have what is also called, in this case, support 1 or S1. So we'll put our median zone right there. And if we see the market starts trading below this support, okay, we can put in a short position. Okay, we stay patient with it. And once the market started breaking down, you could say, okay, I'm going to look for a short and then look for this target right here, which I believe it did eventually towards the end of the year. And that ended up being a really nice trade. So I had nothing to do with me looking over here at this area, looking here, looking here. I'm not going to say it's the wrong way to do it, but it's been touted around so many times about structure, finding structure. And if you were like me and you had trouble finding which levels were valid, which level, you know, how big should the zone be? Should it be like a 50 pip zone? Should it be a 100 pip zone? Should it be a 20 pip? It was really difficult for me to understand, and I wanted to get into a trade as precise as possible so that I don't have to put my stops so far away and then risk, you know, more than I wanted to. It's just, I was just trying to get into the market at an optimal level without having to guess how far the market was going to go above, what they call structure, or if it's even going to stop there at all. It's just going to keep on going. So this is a great way. And again, this is like old school, pivot point trading, because back then they used to just calculate it and then get ready for the next day. A lot of day traders used to use this but now I'm using this on a daily time frame. And the great thing about technology is that now you don't have to, calculate things on your own. The platform does it for you. So that's going to be it for this video. This was just a short video to explain that you don't have to, if you feel confused about all these different fluctuations and what levels to draw as support and resistance, let the pivots do the work for you. And from that point on, you would just be able to just wait for these areas and then make a decision of whether you want to buy or sell. All right, so that'll be it for this video. Tomorrow, I'm sorry, not tomorrow, but Friday, I will be doing my Euro USD weekly recap that I always do every week to close out the week and look back to see what happened. And I'll be doing that, of course, with the same strategies and stuff that I'm showing you and the tools that I'm using. I use in my own trading and have been using them for the last 10 years. So I hope this helps those who check out this video. And if you have any questions, just send me put a comment, or you can even contact me at internaltrader.com, or you can head to internaltrader.com and check out the different services, coaching, one-on-one coaching. I work with clients one-on-one to help them improve their trading. So with that said, guys, I hope you found this helpful. Love if you subscribe, and it really helps the channel. So with that said, have a good night.